Traders, we're going to be discussing unemployment. We're sitting at a 16-year record low, 4.2%. So if you can't find a job, it's definitely not the market. Let's roll the intro. Guys, welcome back to another high impact. It's your boy Kleveland. Hope you guys are having a good Tuesday. Right now it's about a couple hours outside of the US Open. Yesterday we talked about seeing a little bit of strength still coming in on this US dollar, but we have really yet to have it, okay? So we do have a bank holiday today here in the US. We have one in Australia as well, but something that did move during the overnight was that GBP USD, okay? So guys, go check out the Monday market breakdown, see what we're looking for that pound. Pound sold off for about 2 weeks now, all right, after that huge extension up, and we are expecting a little bit of strength coming in. So we just hope that that move hasn't already executed, okay? So other than that, folks, look, this stuff, it comes out real quick, so you want to make sure that you're subscribed. Like the video for your boy, all right? So before we move forward talking about unemployment, we actually need to talk about NFP a little bit, right? Because NFP, we shot that high impact last week. That link will be in the description below. And we had a forecast of 80,000 jobs added, okay? That's what you saw on Trading Economics, Forex Factory, and the general consensus overall. And that's a pretty big haircut coming from the national average in 2017, which is around 187,000 jobs added, okay? So again, a very substantial decrease in the expected outcome. But folks, we ended up getting 130,000 jobs added, okay? And so we had a little bit of a poll on the last week's breakdown. I was asking guys to give me an idea as to where they thought the actual would come out as, and we do have a winner, right? We had Edwin. The closest guy that we got to hit off on the correct number was 75,000 jobs added, okay? A lot of people were not expecting a negative number, and we haven't had a negative number since around the recession back in 2008, okay? So again, a negative 30,000 number is quite substantial, but there was something that I spoke about in the last NFP that I want to resonate with you guys again. I said it a lot more than I thought I did. Check out this clip. On the subject of unemployment, understand that NFP isn't an isolated event, right? It isn't sitting on some pedestal that, you know, where people discount every other economic data release that is coming out, all right? Just like every other data release, it sits inside of this, you know, enormous category of productivity, and again, they all weigh on each other, right? So if people are more scrutinizing CPI and inflation, then guess what? NFP is going to be kind of pushed down a bit on the totem pole in terms of how important it is as a release, all right? NFP is not an isolated event. Okay, understand the market as a whole and what the market's looking for as a whole. Okay, look at inflation, look at the CPI. Okay, look at the PMI. All right, look at all the GDP figures that are coming out. I'm gonna say it one more time, right? NFP is not an isolated event, right? If you were trying to play that NFP number alone to pick your directional bias on that Euro-U, right? So you would have wanted to play Euro-U long, you got washed out, all right? If you were trying to short CAD after NFP on maybe some kind of counter trend line break, because CAD is right now running on the trend line on the 4 hour pretty well. If you're trying to take a break lower, then again, you got washed out, okay? You have to look at the other releases that come out, and depending on how the market is currently scrutinizing those other releases, again, that's really how you want to summarize how you want to take these markets in terms of a directional bias, right? So unemployment, right? Unemployment came out at 4.2%. Okay, a 16-year low, all right? And average hourly earnings came out as well as a 0.5% increase year over year. Okay, mostly because of the utility sector. A lot of the utility workers were working overtime back in September because of all the weather storms and whatnot, and that overtime pay actually added to their salaries, which gave us an uptick there. Because average hourly earnings have major implications on CPI, right? So if you are getting people to make more money, then guess what? They're more likely to spend that money on consumer products, and then boom, you're having a CPI increase. Okay, if you guys don't know what CPI is, go back, we made a video on CPI. But mainly what I wanted to talk to you guys about was unemployment and certain types of unemployment. I'm going to pull over here to the board and I want to discuss certain things dealing with the participation rate, U6 unemployment, and currently how the economy is positioning in terms of, okay, how many people are in the labor market and how old are they, how many people are coming in, just so you guys can have a general idea as to where we are, and month by month, if you keep track of it, you'll have an idea as to, you know, where we're going and what's good and what's bad. All right, so let's pull over to the chart. Again, if you guys have any questions, let me know in the comments section below, and like the video for your boy. Okay, let's pull over to the chart. To explain the current status of employment in the United States, I'm going to cover the participation rate, which is going to run the gambit of all the different types of employment here in the country, okay? So understand this pie chart here, this situation, what we got going on. Understand this area as employment, okay? Everything here, okay? And then understand the top half here as unemployment, okay? So employment quantifies as 16 to 65. Okay, you can start getting jobs and whatnot when you're one of those young kids. And unemployment are people who are either retired, too young to work, or people who don't want to work, okay? So like your cousin that's still living in your basement. But this section right here is really important because this is going to be your U6, all right, and it's going to be your U3 unemployment. Okay, I know that looks pretty ugly. So here in this section, you can somewhat split this in half because U6 represents individuals who are underemployed, right? So last week I talked about how if you used to be an engineer and now you're working at the YMCA, you're underemployed. You aren't contributing as much as you were previously to the labor market. That's a really big deal, right? How many people are still underemployed, which can kind of show you and tell you how much has the economy actually improved since the recession. Well, right now, the U6 is ticking down, and once we get under 8%, I'll show you where we are right now. Once we get under 8%, again, that's a really good sign to basically see how, hey, the market is really performing well. Most participants are back to their same paying jobs, if not higher, right? And so U3 is just individuals who are looking for a job and they don't have one, okay? And it doesn't even quantify part-time work as well. So here in the underemployment area, here, we'll talk about employed. Right now, we're sitting at around, I think, a 63% labor market, okay? In terms of the total market participants in the entire labor force from 16 to 65, 63%, okay, that can actually participate. So that's a pretty big deal. Again, we're ticking higher. And as we know, the more participants in that labor market, the more consumer spending that's going to be happening, which means what? The higher uptick in inflation, right? More money will be passed around, okay? So this is a really important number that we're going to have to keep our eyes on when it comes out and on Friday. We have a CPI release that's going to come out Friday, and here's the actual, right? Here's the forecast here. I think we're looking for a 0.2% increase month over month, okay? And so if we get that, that's going to be a really good sign. We got our first uptick in CPI last month with, I think we hit off at around 245. We were averaging 244. Here's a chart there. So if we can maintain increases here in the CPI, that again, folks, that's going to keep this dollar strong. That's going to give us our break of $1.17 flat on that Euro U, and that's going to give us the pullback that we want on that UCAD as well. We might not see UCAD back down at these 25 flats. Okay, this thing might be roaring forward as this labor market really starts picking up speed. Okay, so other than that, I think we also do have a FOMC meeting that's going to be coming out tomorrow. I think Draghi is also speaking on Thursday. We also have PPI, Producers Price Index, which is going to give you an idea as to how much producers are paying for their goods, which will then relate, okay, how much consumers will be paying, right? Because if they're going to be paying more for goods, then we're going to be paying more for goods, all right? So that kind of gives you an early inclination on how CPI is going to be, okay? So folks, that's our labor market. There's a participation rate, okay? Right now we're sitting at around 63%. We're seeing an increase, okay? That 4.2%, folks, as that thing starts ticking down and all these people that are entering into the labor market that are 17, you know, the folks that have been distressed workers and out of work, as this number here gets closer and closer to 3%, what's going to be happening, guys, we're going to be having more people contributing to the economy, which means we will get that uptick in that US dollar. What have we been looking for on the US dollar, right? We've been looking for US dollar to pull back a bit. We've had a 12% haircut all through 2017. I think that's a little bit over exaggerated, seeing that the fundamentals back in this market right now are slightly positive. So I think we will get a continuation on that dollar. So I'm still a dollar bull. That'll be 4 weeks for 4 weeks. I think we'll make some money. All right, we might get some short-term pullback in the opposite direction, but generally speaking, over the next 2 or 3 months, we will see that dollar probably outside of 116. And I'm going to use this snippet a couple of months down the line saying, I told you so. All right, guys, like the video for your boy. If you got any questions, let me know. I'm out. Peace.